Hello guys, welcome to the Train Parrot. Today is Monday and we have just closed the highest weekly candle ever in history for Bitcoin. People are running in circles on crypto Twitter, people calling for 250k. We really need to be able to distinguish between what is reality, what is likely, and what is absolute crap in this position. Yeah, the situation is very bullish. We look into the next levels that we could reach from here, but as usually in this channel, we do things data-driven, we use technicals, and we'll see what comes next. Thanks so much for all the views and likes on my video yesterday on Sunday. It was an emergency update because I noticed that many people were requesting, can you please take a break from your weekend and come out and update us on what's going on at the moment. Things have evolved and now we have a breakdown on the 4 hour. I want to make sure that you are up to date with what are the implications of that and how we can discard it, invalidate the breakdown. Guys, if you want to trade on a non-KYC exchange, that means that you can deposit and just in 2 minutes get your hands on a trade on a decent exchange. Look no further than Bluffing. Currently, I'm running this campaign that even can give you an iPhone 17 depending on how much you deposit and your trading volume. The link is in the description. And this is crazy. Google Trends remains in the lows. It has only bounced from 20 into 25, but very far from 47 or even 68 that we used to have in previous highs. So that means that as we put new all-time highs, people are caring less and less, which typically is the opposite in previous cycles. This tells me that retail is out and that all the fuzz that we used to have is ended, unless we really go into 130k, and that makes the trick to bring all the people, particularly if we happen to have such a scenario when there is a decent amount of liquidity coming into the market, like quantitative easing, rate cuts, bonuses for people coming from the tariffs. And the same story is kind of happening as well to altcoins, as you can see at 29 from lows of 23. That is a very humble move, I could say, into resistance of that flag. Looking at the news, of course, everybody's going to be talking about the new all-time high above 125k as investors seek for safety. Let's understand this. Fresh all-time high amid shutdown-driven debasement trade pulls strong spot BTC ETF inflows, which implies direct spot demand. We got a 7 out of 10, this time coming from Japan. Remember, we are talking always about Japan. Political waves send Bitcoin soaring to record highs. Everybody's only focusing on what's going on in US, but in Japan we got macro catalyst, that is the Japan leadership but plus weaker GPI coincides with BTC record high of 125.7k. Momentum can attract follow through buying. That's a 7 out of 10. And the third is also bullish, but it's the same kind of news around the all-time highs with a twist around the ETFs that were peaking on Friday. So yes, we will appreciate that every time that there is an all-time high, the theme is always the same. How high can it go? And people are all on crypto Twitter trying to gain as many followers as possible by throwing their bets into 200k, 300k, 500k. Whoever says the more nonsense number to the upside is the coolest crypto Twitter technical analyst. We'll see about that. Credible Crypto looks into over 150k. Jelle says 150k. Thanks to the retest. I don't know if you see it, but every time that you get a retest, the push up is smaller. For example, from here to here is the most intensive one. This one from here compared to that one is pretty much 2/3 or less of this one. Then this retest into this level, it's very humble. It's almost like that song, Eeny, Weeny, Weeny, Short D. I say D, I didn't say anything else. It's almost like a diminishing pump. It's like an aging old man losing momentum. And if you don't acknowledge that, you have to look into the RSI descending highs that are reflecting the nature of these pumps. So now here, Bitcoin really needs to break that resistance that we keep looking into. That is yesterday at 128, but we have a candle close today, so we can see a new target. We'll see about that once we get into the weekly chart. Here we have from 120 to 250. Or let me be a cool influencer for 5 minutes and say between $28 million and $150,000 billion trillion dollars. Maybe if I do that, I can get into 1 million followers. If you think I don't need to do that, just hit the like, write a comment down below, and keep me with my feet on the ground so I can drive you to sanity. Here we have Decode calling for this and saying that we need to have the discipline of observation. But if you really want to observe, my dear friend, you need to observe everything, not just the green that appears here. If you just focus on the green appearing, you're seeing probably 10% of the picture patterns. And if you're not good for observing all the patterns, you shouldn't be posting in the first place. Homework for you guys, write it down in the comments below. Spot all the patterns in here, not just the green. Spot length, high, timing, slope, highs, blow off tops versus double tops. Spot everything and make a whole thesis around that. Then pick a side and decide when you are invalidating your preferred thesis, which is what we did yesterday in our video. If you watch it, good for you, because you know what I mean. Glassnode is saying that Bitcoin spot ETF flows have turned sharply positive, driving price to new all-time highs. Renewed institutional demand is reinforcing market momentum, marking a key shift in capital flows after weeks of outflows. Sustained inflows signal strengthening structural support into Q4. Martin is saying that short-term holders will unrealized profit hits a cycle high, not the highest high that was in the previous all-time high, the one that we had around August, and the unrealized profit right now that they are sitting on is 10.1 billion. So I will say that it was around 11 billion the last time, maybe a little bit below. Be careful with unrealized profits of short-term holders because they are called short-term holders for a reason. That means that eventually one of them takes a big profit and then the rest of them follow through, producing some sort of snowball effect that you can observe in here. It is from this high of profits when it starts collapsing in here, then you get another high in here and another high. It's of course impossible to tell if this is as high as we are gonna get. This could carry on increasing, but with those increases we also get an elevated level of risk. Dan is referring to this breakout from this channel. We were tracking that channel before. I will not want to see price lose the 117, 118 again, because at that point you cannot break a bit the structure, right? You have that previous support. In yesterday's video, I remember I talked about this 117 to 118 as a potential area of interest for me to re-enter. That's because we have a big spike in the volume profile there. That could be potentially the point of control, the area most traded, and being below that implies a lot. First of all, within this vacuum that can send you into 110 to close the CME gap. So being below that 117, I think is a big deal. It's not just losing the previous resistance. It is a lot more than that. So watch out for aggressive moves. I agree with Dan in here. Axel, the average daily inflow of stable coins of USDT, USDC to centralized exchanges is holding at a level of 127 billion, while the 365-day average over the past year has risen from 69 billion to 105 billion and continues to grow. All of this is fuel, guys. The more it enters exchanges, the more we can move, the more open interests that can be used, more speculative, but it can also signify local tops. Again, the peak is the peak FOMO. So if we pair together an elevated level of greed, let's say we were in extreme greed at 85, 95, and you pair that with inflows and with short-term holders at very high levels of profits, and at the same time everybody is in profit, we get a ratio of, not a ratio, a percentage of 99.8% of holders in wallets are in profits, then it's very difficult to keep that equilibrium right there and not do a decent pullback, because people notice that and they end up taking profits. Martin again says that the whales are locking in profits. Locking in profits doesn't mean this is the final top, but during tops, it is a requirement that this is happening, and it's happening. So this could be a top or not. If they were not taking profits big, that will tell me, well, maybe they're waiting for higher, and that gives me some certainty. Both new and old whales have been actively realizing gains. We're talking about hundreds from new whales and old whales taking profits of 50s, 27s, and 68s. Definitely the short-term holders take more profits and more aggressively than the older ones. This week, there is some elements in the calendar economic. We got on Tuesday the New York Fed inflation expectations data. I'm not sure how the government shutdown could affect how much data can actually come in. On Wednesday, we have the Fed meeting minutes release, and on Thursday, Powell's speech, Friday, MI consumer sentiment and expectations data. I wouldn't say it's very back week, just a few things incoming. And then in here is talking about the CME having already been closed. And I'm not fully sure. I am not completely convinced, but I feel like he's tracking the price of the midnight close, but CME closes before that. We'll see about this. According to his chart, we already took the gap that we formed over this weekend. The liquidity from the Fed looks ready to reverse higher. As you can see, this has been a level of support. We came from lower. This is tracking the net liquidity. The balance sheet keeps going lower. There is also an area of potential support coming in from here, from the bear market in 2022. I just realized that the balance sheet has almost the same amount, which was 283 trillion. We are at 296 trillion. So we just reduce it 4%, and we are at the bottom of the bear market between 2022 and 2023 levels of the balance sheet. That's crazy. And many people are looking at this particular picture. This picture was posted in 2023 in December, and it was talking about the length in days of from all-time high to all-time low, referring to how long it takes from the lows of the bear market into the very peak of the cycle in terms of days. And there is 1,064 days from low to high, and from high to low is 364 days. That's how long it takes from the peak of the cycle to bottom in the bear market in these past two cycles. So in theory, on the 6th of October, we should put the final all-time high if we follow this particular crazy trend. And that is today, guys. So today we should put an all-time high, and we should start entering the bear market according to this crazy theory. I'm tempted to challenge that theory because in other cycles we didn't get that, but we'll see. In the previous cycle, we topped by reaching the top CPR level at 64, and then during the month of the peak, we lost virginity against the pivots, and from the pivots we failed to touch the first resistance. Remember what the model says about this? It says that if in a month you cannot touch the first resistance, the next month you won't touch it. So this time the model was right, and the bear market starts with a drawdown of 39%, losing virginity again, touching the pivots, but that it becomes resistance, and no news about touching again the green for a while until we do the dead cat bounce at 48. So if you think about a confirmation of bear market, right now we are hitting the second resistance. The third is at 129,443. Interestingly, the past month we couldn't touch the first resistance, so that model was calling for a move down. And let's have a look at my community. What are the questions of the day? We got in here with 4-hour RSI breaking support and forming a pivot, but daily RSI keeps licking the bottom of the resistance. Does that mean that the likelihood of price going into 126 to take the leftover meal is high? I guess he's talking about the liquidity on the longer term that we can see right in here. There's still some leftover at 126 127, and then at 128.7. So the 4-hour has faken out multiple times during strong trends. So I wouldn't put all my bets on that breakdown on a Monday, because if New York opens very big in the green, that could fake out to the downside, become into a bear trap. And that's why I'm not averaging at 125, and I'm actually waiting to average somewhere around 126, 127. Alex and everybody in the community with any tier in my Patreon are gonna get notified if I average up my short. Remember that my long got already stopped out in the profit. That was a massive move to the upside, and if we go lower into 117, 118, I may or may not enter in a long, depending how it looks, if we are around that point of control I was talking about earlier. All of that goes into your email because you are part of the Patreon community, Alex. So I will let you know. I think there is, to answer your question, a chance that we go for highs. Remember, we are in a strong trend, and a 4-hour pinch, a breakdown, requires a little bit more than a small breakdown to confirm. You could consider, if you are already in a short, oh, we got some chances of going lower, but always with a pinch of salt because of the strength of the uptrend. Paulo is saying, hi Mariano, I know it's a bit soon, but are you considering a big short at the end of this bull market? I like the idea of scaling a short, not of straight away entering with a big short, because although I was mocking all the people saying 150, if we break beyond 128 on a weekly basis and we hold that, we could have something really crazy happening. And remember, I want to keep my win rate to 100%. Therefore, I cannot just take things like, hey, here I'm absolutely convinced I'm gonna put all my savings on that. There will always be a reserved amount of my portfolio allocated to that in case it blows up. I do get hurt in that sense, but hey, just a proportion of what I did during the bull market. If you were to enter a short now, where would you put the stop loss? I think this is a new member that joined today, and I am already in a short, but if I was to enter a new short, well, I will enter straight away because I entered at 118.6, so there wouldn't be any harm on me entering with a small short from where we are. I'm not gonna use the stop loss. I want to average it up at levels I have huge high confidence to average up. My confidence on the second addition needs to be greater than the first entry. The first entry can be a little bit naive or sometimes miss some data, but the second one and the third one needs to be with full confidence. If I have to use a stop loss, let's say there is a rule I cannot average up, then I will place my stop loss right above the previous high, and assuming that I'm entering in a short on an area where it's coming back up. I don't like shorting when it has already come back down, because that sets my stop loss too far away from the price. Anyways, I recommend that you watch all my videos because I talk about stop loss in little chunks in every video. I will have more zoom and clarity for the order placement for shorts. I am DCAing to the short, and I'm not quite sure between liquidity and conjunctions of other TA between 126 and 130. Where is best chance to hit a good entry if we don't go for 136, let's say? Well, to me, that depends a lot on what was my first entry. If my first entry is at 125, there is no way I'm gonna look for new entries at 126. Remember, for Bitcoin, one rule of thumb, if you wanna keep things simple, at these highs, I try to be around the 10% separation between orders. That means on Bitcoin, we are talking about 10K. So if I enter at 118, 126 could do it, 27, 28, yeah, around that area. I start looking if there are technicals supporting that. If there are technicals supporting it at 120, that's too close to my 118. I'm not gonna double down or add so close to the price unless it's just something symbolic, like 1/3 of the initial order, just to do something to make it slightly look better, sometimes for psychological reasons. How close does data say we are from cycle top, seen ready for exponential phase? All over tweeted, but seems like a lot of noise. There is a chance of exponential phase this cycle. I'm not gonna deny that. I think it's low likely, but it can happen. We are at resistance on the weekly. It is important that once we see that resistance, we understand where it is. I think eventually S&P, Nasdaq, Bitcoin, gold, all of them need to have a decent pullback. And when you see everybody shouting the same thing, even if they are right for a little bit more, that doesn't make it fully right. So far, the cycle hasn't broken those levels to fully confirm it. It's just some small potential, but they really treat it out there as some certainty, and that is what could trap a lot of people. Luckily for retail, they are not paying attention, so these influencers are gonna need to shout a lot more and get Bitcoin really to move a lot more so they can get all that damn data, damn money into the system. Lera is saying with retail just being MIA, it seems like the crazy volatility is just not going to arrive. What's the downside possibilities like in the short term if this is not the start of a bear? We'll look into the weekly to see downside possibilities, and on the daily, that's my two preferred time frames to look for that. If you can, please go into Bitcoin price action, possible short and long opportunities and levels of support. I have covered a little bit of this, but I'll go deeper later in the video once we see all the full data. If there's any truth to the BTC supply shortages on exchanges, yeah, there is less Bitcoin. That's what happens. I don't think it's that dramatic though. I feel like all cycle we've been mentioning how retail isn't here, but others are saying that too. Is it possible that we don't see Google Trends spike and that majority of retail is already here? How does the Pi cycle top indicator rank in your considerations of metrics you consider? I haven't looked into the Pi cycle probably since the bear market. Somehow I forgot about it and I'm not following it, so I really don't know what it's saying. Right, we continue to increase in terms of the odds of double cut 50 basis points, and I see how that could be influencing the current trend, the uptrend not just for Bitcoin but for many other assets as well. And on Poly market we see an elevated number as well. The most is for 25, and then you got a 3% for 50 basis points. Interestingly, in Poly market the no change is 7%, and you got a 1% of 25 plus increase. If we ever hit either of these two, I will say the pullback is here. But according to the Fed Watch tool, we don't see those appearing. The hike is 0 and everything is split between 50 and 25. If you're checking my Telegram channel, you already can see all the charts and you can see the breakdown on the 4-hour and how it's been fighting to reclaim that and to fake out as a bear trap. If you want to join my Telegram channel, do it from the link in the description. Do not search for it. Do not talk to me in any private message on Telegram, Instagram, which I already closed that account, and on Twitter. I will never talk to you on any social media if it's not publicly. If it's private, they're scamming you. And we are at all-time highs at the moment of open interest. 44.45 billion, and that is very close to a significant level that I want to cover. The price is on the top, open interest aggregated is on the bottom, but let's zoom in here. I want to look closer into what happened in this pattern. As you can see, this rally from 10 billion into 21 billion when we reached 73k on Bitcoin had a retracement back into 14 billion, and then it hit around the golden pocket. The golden pocket are all these highs with the exception of this high that reached I think 105k. Then if we take this high and we repeat the same thing, basically we measure all of this to the bottom of 22 billion. It's giving us an extension golden pocket of 45.20 billion. So if we were to repeat the same performance, we could be getting something like this before another wave down. So aggregated open interest can increase a bit more according to the past performance, and then it should be putting a slowdown. I see the slowdown all the way from the left into the right, so having a peak of aggregated open interest at 47 billion is a good guess, assuming that we don't break 128 and we put a breakout on the weekly over all that descending area of lower highs on the RSI. If we put a breakout in here, contrarian to what we did in the previous cycle, we kind of need to very quickly shift mindset, even with the short and everything, because this could put a decent breakout into this area, something that hasn't happened. But let's say all the crazy people are right. At the moment, we're very close to resistance. That resistance comes in at 127.7 today, less than 128. So we are very close to that. So going back into the CME gap, well, we do have the 110 that's still sitting there, but I think on Friday at 9 p.m. UTC +1, that's UK time, we close right here, and we haven't come to that level on CME, neither on Binance. That level on Binance at 9 p.m. UK time was 122.5.6, somewhere around there. So there is a move down, in my opinion, to close that gap pending of 1.24%. I'm gonna leave that gap right here. We are tracking it, and I think we close somewhere around that. So I kind of disagree with Dan that we have closed the CME gap. This candle moving up is starting from the opening of CME gap, which opens in the early hours of Sunday. Right now the market is open and is trading at the highs, as you can see, very close to 124k, very far away from the closing price of Friday. So Bitcoin status, my community already has this link, and we got RSI top of the range has already been reached. That 85, we already did it. The breakdown is confirmed. We can reclaim. We have candle closes below the support. We are against the second CPR, and we are having an ongoing battle to see if we can get to the third. And we have two CME gaps, one at 122.5, the lower end, and 110, that are putting pressure with liquidity that needs to be filled. On the daily, we have a daily breakout that is still holding. Yes, it's rolling over, it's losing momentum thanks to the breakdown of the 4-hour, but the daily could tell the 4-hour to shut the F up, that we want to continue up into the top of the range, and we need to be prepared for that after a bull cross on the MACD daily. On the weekly, we have the highest closing price candle ever. We bounce off the bull market support band, but right after a bear cross, which is kind of a mixed bag, right? It's acting as support, but is right after a bear cross that now is pointing up. Are we gonna get right after that a bull cross? Well, I don't know. It will take some time to get it because the mouth is still open, not by a lot, but is after this bear cross there and is still pointing up, similar to this area in here. So let's look at the 4-hour. We got some trading volume and a point of control probably around the 123. We are holding previous highs, so the structure is still bullish on the 4-hour. It is the momentum of the 4-hour, the one that is having a little bit of drama when it lost the 64.84. Now that resistance is 69.38 and it needs to be reclaimed. So the 4-hour closing price required to fully reclaim that is 124,675. That number is going to be changing all day. So how can you keep track of this? You go into my Telegram channel, you click on TTP charts, and you request a fresh version of these charts with all the annotations that I just saved. Beautiful. Now the top of the range is still sitting at 84 point something. So hitting that and breaking that downside of diminishing highs on the momentum is really strong. It will show an enormous amount of strength on Bitcoin, but for that, price needs to go into 133 now. Yes, guys, reclaiming this resistance above 124.6, as I said before, and not putting a bearish divergence, which comes in at 79 and continuing up into 84 now, in this context, puts the price of Bitcoin at 133. Do we have the strength to do that? The probabilities say no. The highest probability on the 4-hour at the moment, based on this picture right there, excluding everything else, says we should, with highest likelihood, get a rejection from 69.38 and continue down in the channel, or in the best case scenario, we just go into this 78 and then we continue with what we are doing, which is a channel down. Now that channel down could push the price somewhere in here and build a bull flag that doesn't really want to go that low, and from there it resets and it can go to the higher prices. That's how momentum and price work together. All of this, now if you can walk and chew gum, we can move into the daily and into the weekly to incorporate the rest of the picture, because the 4-hour is not just a single time frame. In Bitcoin there's millions, infinite time frames, and we need to at least analyze 3. If this rejects in here and it pukes big, we have incoming support at 30 and at 22. The medium is at 58. And looking at the price and focusing on the price, we can see areas of support and resistance. The previous one is 120. Then we have the equilibrium at 117. Remember, do not break 117, guys, because that makes it a lot easier to go into 110 and all of that. A correction into 117 is kind of a 50% Fibonacci, so probably from there we will have already reset RSI and we can find strength to continue as long as the rest of the market allows for that. On the daily, we don't have any breakdown. On the daily, we are still strong. We are rolling over. Yes, there is some weeks into the all-time high with rejection from there that could have supported the idea of a liquidity hand. But the strength on the daily still shows that it's not done. It's at 71, 72, and there's some upside of 11, 10 points into the global resistance of 84, which in price today is coming in at 137.150. Volatility getting closer to get exhausted on the daily. On the 4-hour, it got already exhausted, and that's why it broke the channel of the momentum. We are battling with the second CPR. We see if we can get into the top. Remember that we are still in a virgin month, no touches of CPR pivots. And let's talk about this candle. This candle is huge. It's amazing that it closed above everything. It even wicked to an all-time high, but the closing price is below the previous all-time high. Still, I consider this extremely bullish. It's hard to find a candle like this in all the bull market that didn't have a follow-through with additional upside. Remember that the extension of 1 in here is 133. The golden pocket, it's around 149 at the moment, based on what we already did on this flag. So this flag in here, if we repeat that performance now, we are at 132. So it's not crazy to think that, but we have to keep in mind that every push has so far been diminishing. So calling for a repetition of 133, it is indeed based on data and on trend of the diminishing highs stretching it, right? Because if we continue the trend now, we shouldn't be able to repeat the past performance because every single performance is diminishing. I hope you get the point. So we'll see what we do once we get into that resistance on the momentum as well. If you didn't watch the video yesterday, we got an LS2 leverage squeeze sell signal. Go and watch it, check the timestamps and find out why it is important. We also covered yesterday being on the monthly above 70 and its implications. Today we are precisely at RSI 70.00. So that's crazy. Go and watch yesterday's video. And we kind of lost access to Big Well Explorer. I say this multiple times, but I've been looking for a replacement because I still have a huge interest on what big wells are doing in terms of depositing and withdrawing from exchanges, because that calls for distribution. Look at the past performance of this. I feel like I cannot live without this indicator, but the source of data is available on CryptoQuant. So I'm going to be looking into exchange inflows, spend output value bands, and spend output H bands. So H bands is for how long the people that are depositing into exchanges they've been holding. Call it long-term holders. And in here, value bands is how big is that wallet that is depositing. So both of these pieces of data are extremely important. Value bands, yeah, we got some people that were holding 10K or 1 to 10K or even more that have been distributing on this wave up. Not as much as here, not as much as here. Big value and long-term holders distribute early in the cycle, okay? In the previous cycle, they did that at 38, 48, and they were pretty much done for the cycle, okay? They leave the rest of the cycle to the losers. Go and have your own battle, you know, give and take, liquidations, futures, whatever. Whales, if they want to distribute, they do it at a sensible price, and then they go home. They don't talk about Bitcoin ever again until there is a bear market to accumulate again. Pretty cool approach, right? That's what I'm doing, by the way. If you are just discovering crypto and they are convincing you about those targets of 150 and they don't happen, and then you don't have risk management because you never heard about it, you're being rug pulled. It's a scam. From here, it's a scam. Run away. So there's been big distribution in here from value bands of big accumulation. And in terms of age, the biggest one in terms of age happened at 44K in Bitcoin, and in here where I sold all my Bitcoin. Yes, I bought it pretty much all back in around these lows, but you can see that the most recent distribution from these people was at a price of 116. So again, 7 to 10-year-old and even older coins are distributing a lot of Bitcoin around those prices. Not as much as here, but you shouldn't expect it to be that high at this time in the cycle. And for those that are looking which side should I be trading, well, I cannot really give you any advice, but personally, when I see the oscillator of the futures interest at over the 11% band, the blue one, which is called the high, I completely move away from any ideas of looking for a long, because that means that the open interest is affecting more the longs, and I'm looking for shorts, if that makes sense. When we are on the lower end in here, I'm looking for longs, and that's what we were doing, right? We were already in a long. By the way, I entered a little bit too early. We had some drawdown, but then that gave me confidence. I'm gonna hold on to my long, and then we caught that move of over 10K to the upside. Now I'm doing the same, but upside down. Being there doesn't mean, hey, jump into a short anywhere. It just means do not look for longs. Give preference to shorts, and then fine tune a good short, right? This doesn't tell you it's a good short, but it gives you kind of permission to look for a good short. We are in grid at 71. It has declined from 74 on Sunday. Let's look at liquidity pools and the rest of the order book. Yeah, 3 and 4 are there pending from a thread. We cannot guarantee which one is going to be taken or not, but it's very attractive for market maker. It's very easy now to take them, particularly considering that we do have from long term a leftover on the plate that I already mentioned earlier in the video. In the past 3 months, still 107 is very heavy. And on the 30 days, now the biggest pool is 110. We move up, therefore we cannot see 108. Yesterday, 108 was the biggest, but hey, it's out of the window of the 30 days. This is how it looks today, the 107. Liquidations over the weekend, let's say not that much on the short end. Still looking for liquidations. Maybe liquidating all this area in here could bring in finally a big candle of liquidation red right here. That could be as good as an alpha as this one here was for taking a long from 22nd of September, right? And in terms of material indicator, fire charts is showing us still that 130K with $55 million, less than this resistance, but still around there waiting. Purple whales, let's have a look on the monthly time frame, are pushing up with the market opening here. They've been kind of entering and exiting. I am not fully sure if this is the beginning of something, but as you can see, it's pointing up, and that means that they could bring the price higher. Brown whales still persisting with upside. Let's have a look at Market Monkey Terminal, and we can see at 124.5 some decent defense up until 126. Below the 123.5 is 1K. We have this 117.5, pretty loaded. Guess what? People know, right? 117 is a big deal. It could be the difference between black and white in here, and they are defending it in case they get the chance to use that point of control in their own benefit. CBD is pointing up, aggressive buyers, but is rolling over, so there's a slowdown on the CBD of aggressive buyers. Net longs took a nose dive here, not that big, from 13K into 10K. Net shorts also slow down over the weekend. Net open interest is still at the very highs. There is some positions closing. I say closing because I don't see any significant liquidation happening so far in this area in here. So we can observe that 130 and confirm that is there. The 117, there is a cloud around here and another cloud around the 112.5. Looking at high block capital, we still don't get negative funding rates, which will be amazing to find a long, particularly if we go into 118, 117 and we see that negative funding rate. Longs are coming back in as the market opens from the lows of 36. The alpha of the top, we still cannot discard or confirm it if it play out. Remember, being below the blue line, being so little longs tends to print a local top. This so far is a local top, but we could take it still if the longs come back very aggressively in this area. In terms of the order book placement, ratios and order depth, we can see that we have green all the way from 2 to over 20% deviations, but at the very close proximity from 0 to 2%, you can see these two are in the red, and that means that there is some shorts piling up right there. Are they gonna win? Well, I don't know. They are there, and if there is a huge bullish sentiment coming from general markets or New York Open, I'm sure that they can be squashed out of the way and hit more liquidity to the upside. In that case, we add to our short, but for my long, I still reserve my interest around 117,677, where we have 536 million of open interest that enter long. So if those longs get scared, they might bring the price there towards this level of previous resistance. Is that gonna hold? Well, I have no damn clue if it's gonna hold, but that could be my first entry for a small long again. 562 is the delta as of now. We have a huge party of only fair value gaps calling for a move down, even these ones at very high prices, first time that we have them above 120k. I am sure that we are going to have a lot of fun closing these fair value gaps. The question is when. So let's do a final capitulation summary of everything that is going on around the swing trade. I am currently not in a long because I took profits around 123.5. That was thanks to a stop loss taking profit. I am looking for a new long. We are in the context of a breakdown that wants to reclaim, and it needs to go beyond 124.6 to reclaim. If it does that, the most likely scenario, if we ever do it, is to go into 78 resistance. That 78 resistance is at 128.5. which is also the weekly resistance. I think it's low likely that on a closing basis price, the 4-hour can reach again the top of the range. But if we do that, we could get on the 4-hour into 133k. And guess what? That is the key to put a breakout on the weekly, assuming we hold around those levels, because we could do blow off top intra candle during the week, get into 133 and then come back sharply with a 40% crash. Yet that's possible, but that doesn't fit the weekly getting into here and holding around here, so that the weekly time frame can finally have a confirmed breakout next Sunday, which is needed to get on the table Q1 and Q2 upside of 2026. But back again into the swing trade, 4-hour is very frequently faking out to the downside like this. So that move into 128, if we reclaim, is very likely. If we reject in here, I will be pleasantly surprised, because that brings on the table potentially that 117 where we can enter with a small long. At that point, I have to look into my short to start taking profits. Yes, what do you think we do in this channel? We have no clue where the price is going, and we continue to take profits. Win rate 100% 1 year. You can check all my articles on Patreon. They're public. Every single deal that is closed becomes public. Every trade that I'm still holding, you can read it by joining my Patreon with any tier. Any tier does it. Thanks so much. I'll see you in the next video. Bye bye.